If I could only invest in one company in 2025, it will have to be none other than SOFI. You see, I've actually titled my video this way because I'm going to be covering 7 predictions I have about SOFI's business, which eventually led me to this decision. But this is not just any other prediction video, because each and every prediction will be layered upon the previous one to build out the entire thesis I have for SOFI's business in 2025, which will ultimately lead us to what I think about SOFI's price movement and price expectations at the end of the year. Of course, the only caveat here is that we're doing this in early January 2025, and SOFI has yet to report their Q4 2024 earnings. You see, this is important because during their Q4 2024 earnings, they are likely to revise some of their forward guidance, and if what they have revised deviates too much from what we have talked about in this video, I'll perhaps provide another update video going forward. However, if their guidance is quite in line with what we have talked about so far, this will be the video that we'll be referring to at the end of the year to review our predictions. And so with that, let's dive in. If you have watched some of my previous valuation videos on SOFI, you will know that I'm someone that actually sees member growth as a very key growth driver for SOFI moving forward, and it corresponds very closely to revenue growth. And so the extent at which they're able to grow their members is basically the extent at which they're able to accelerate their revenue growth. And so because of that, that is actually where I want to start my predictions. Now, I've already previously mentioned that the way that SOFI is currently operating their business kind of puts a limit or a cap to the total potential members that they can go after. But having just passed the 10 million member mark, I believe they are still less than halfway to their goal of over 20 million members. And so because of that, I don't expect to see a slowdown in member growth in 2025. I expect that either in the third or fourth quarter of 2025, we will actually see the first quarter in SOFI's history where they onboard 1 million members in that quarter itself. And we know that SOFI actually likes to trim some of the inactive members off its member count. And so because of that, I want to be very specific and say that, we are going to see this 1 million members added before accounting for any of these trimming of inactive members. And so, what that means is I can see them, perhaps adding 1 million members in a particular quarter, removing 50,000 of the inactive members off their platform, and because of that, see a net increase in 950,000 SOFI members that particular quarter. And to me, that is perfectly fine because actually, I like it that they remove all these inactive members. It ensures the members that are still on the platform are quality members that are generating revenue for the business. And I'd rather have this, this way or this convention of counting the members on SOFI's platform rather than have an overinflated member count with made up of a large amount of inactive members. And so to me, I think by the end of 2025, means at the end of the fourth quarter of 2025, we'll see around 13.8 million SOFI members. Now, I believe this is largely going to be driven by their partnership with the various sports platforms like the NBA, like the NFL and TGL. Now, especially with TGL, I think kicking off 7th of January. So it is 7th of Jan. Let me check. Yes, it's actually 7th of January, and I just want to say, I saw some clips of the TGL, and I don't profess to be someone that actually watch golf as a sport. But to me, when I was looking at some of the clips and some of the people talk about it, SOFI is literally plastered everywhere. Even the cup is called the SOFI Cup. And so the thing about branding that I've learned over the years, it's not like, people watch TGL and then immediately they download the SOFI's app, but they see SOFI's name often enough, that it creates this kind of awareness that the next time perhaps that they're taking a housing loan or taking out a car loan, and when they look at, the options that are available to them, they actually recognize and say that, hey, SOFI, isn't this that company that sponsors this golf league that I'm watching every single week? And they click in and compare SOFI's rates with other banks. And so additionally, I also do think that, the addition of this new portion of business for the loan platform business really expands the total addressable market for SOFI in terms of the number of people that they can go after as a SOFI member. Because like I said, the initial member count is actually restricted by, certain credit boxes and certain income brackets that they are working within. However, with the loan platform business, they are able to extend their services to people that fall outside their typical credit box, that falls outside their typical income bracket, and they can actually serve all these people using their other products without having to take on additional balance sheet risk. And so especially since this is the full year of them operating the loan platform business in the current format, I think the previous trajectory of member growth doesn't really account for this. And so I expect them to, at the very least, keep up the same pace of member growth. But actually, I would think that we can see some little acceleration in member growth going forward, at least keeping it above 30% for the whole year. Now, the second prediction after member growth is regarding SOFI's business metrics. and these are some of the things I actually like to keep track of when I take a look at SOFI's valuation. And so looking ahead in 2025, I think we'll see an increasing focus of SOFI's management to monetize their products. I mean, this is directly from the management's mouth itself, but I don't think we will see product expansion across the member base until we reach that particular quarter where we actually see 1 million members added, because I think that is what they're actually trying to work towards. And so what that means is that the products per member stays consistent at 1.45 throughout the year. However, the revenue per product I would expect to increase from $46.17, which is where we find it in the current quarter, to about $50 by the end of the year. And what that means is that the revenue of lending and financial services per member will come in at around $72, $73, which is of course not as high as what it was back in 2021, but it is the highest since the third quarter of 2022. And so when it comes to the third prediction I have for SOFI, this is actually something that is of a forgotten business for them. That's not something that people actually tend to talk much about, because during the latest UBS Fireside Chat, Chris Lapointe specifically pointed out that they still had room to grow their home loan business. You see, when he was talking about loans in general, this was one that he actually put a lot of focus on, and he gave us some numbers to actually think about. So, the thing is that Chris Lapointe basically told us that they can grow this aspect of their business without actually increasing the marketing spend, because currently only 2% of SOFI's entire member base, which is only around 200,000 members, is using their home loan products. And so I believe this is one part of the business that is heavily narrative driven. You see, previously, SOFI was known as the student loans business. So when student loans were taken away, right, people thought that they were not going to do well. Now, similarly, right now, people have this narrative around SOFI that they are just a personal loans company. So they think that the loans that SOFI are holding is actually quite risky. And so because of that, I think everyone is discounting the fact that SOFI actually offer home loans as well. And so as SOFI continues to ramp their home loans business, I think, I believe we will see marketing spend as a percentage of overall revenue start to come down, particularly because this is evidently part of management's overall strategy. I think the fact that Chris Lapointe can actually give us some solid numbers about how to think about home loan shows us that this is something that management has been thinking about in the background. Now, for me, how I think about home loan originations going forward is looking at previous data. Back in 2021, they originated 800 million in home loans per quarter. Now, in the most recent quarter, home loans only came in at around $490 million. And if they actually just double the take rate across their member base to 4% from 2%, I think it's not too far-fetched to think that they can get back to the 800 million in home loan originations mark sometime in the back half of 2025. Now, especially if we get more than 2 rate cuts from the Federal Reserve, which I do think it's likely, I think this is an area of the business that is currently undervalued. And we come to the next prediction regarding their tech platform. Now, I believe if you have followed my channel for some time, you will know by now, and it should come as no surprise, that this is a particular area of their business which I am the most disappointed in. Now, the management has emphasized over the last couple of earnings calls and through various interviews that this slowdown in their tech platform is largely due to the macro conditions, and they have reiterated the fact that the pipeline of their customers remain robust. They haven't actually lost any deals as some of their competitors have so far. It's just that the timelines to actually onboard all these customers have been lengthened. It's a bit more than what they have expected previously. And so with the Federal Reserve giving us some clarity on the direction ahead, I think companies actually have something to work with now. Now, like I've mentioned earlier, personally, I do think 3 rate cuts in 2025 is more likely. Whether or not we get a 4th one, it really depends on how the economy plays out, but I think we'll actually get more than 2 rate cuts this year. But I guess in general, companies already have the information that they need to make some budgeting arrangements. And I do believe that, Anthony Noto previously has also mentioned that a Republican administration is better for SOFI because, this is actually a more pro-business environment. And so the larger financial institutions, with Trump coming in later on in January, are more likely to be willing to spend the money required to upgrade their tech platform. And so because of that, I do think it's likely that we see a re-acceleration of their tech platform revenue. But this is an area of their business that they have guided for and somewhat missed their guidance here so far. So this is something that I'll be looking at going forward quite closely. So my biggest prediction here and my expectation is that they finally onboard one of the large financial institutions onto their tech platform. And this will be actually the first of 3 reasons why we might see a multiple expansion for SOFI in 2025. Because the second reason has to do with their loan platform business. I will not go into too much detail over here because this is something I've talked about just last week. And if you haven't watched that video, I'll link it up over here for you. But I expect at least $6 billion in loan originations through the loan platform business. And I do expect that this business will allow their financial services contribution margins margins to expand to around 50% in 2025. And another prediction I have that you could actually cause a multiple expansion in SOFI stock is that they actually launch some sort of capital light business that they have previously mentioned in passing but not given too much publicity to. So I'm talking about things like Cash Coach, and what I'm actually really curious about is their SOFI Plus membership, where it sounds like what they're trying to do is similar to what Robinhood is doing with their Robinhood Go and basically roll out some form of subscription-based services. But when it comes to subscription, I'm suddenly reminded that you haven't hit the like and subscribe button down below. Thank you for your time, and back to the video. Now, as it comes to multiple and price, I think it's hard to ignore what actually happened in the past week, where Timothy Switzer from KBW basically came up with a report suggesting that we value SOFI using a 10 times price to earnings. To me, that is absolutely ridiculous. Now, I'm not going to be spending too much time talking about the report because I believe it's old news, and Chris from Data Driven Investing has already covered all that needs to be covered about the report, and I don't really have too much new to add to the conversation about the KBW report. So if you haven't seen his article, which is really a gem and it addresses all that needs to be addressed about the report, I'll link it down below in the description for you. But I found this article that Chris wrote actually really fascinating because of this one particular graph. I mean, this is the entire premise on which I decided to start this YouTube channel, because I really maintain time and time again that when it comes to valuation, many people just treat it as a math problem, slap in some numbers without questioning the assumptions, and then just run their valuation models from there. And so, when KBW actually says that SOFI is a fast-growing company, just like Pathward Financial and Bancorp, to me, that is actually really, really misleading, because I've taken this table from Chris's article, and you can see that lumping SOFI's growth, which is the blue bar that you can see over here, together with the two other companies and calling all of them fast growers is really misleading. So what I'm going to be doing is I'm going to be showing you three graphs over here where we're comparing SOFI's revenue and profitability to three other companies which are at least performing to similar standards to what SOFI is doing. And so we're going to be comparing SOFI to Affirm, Robinhood, and Upstart. Now, if you take a look at this graph over here, you can actually see that, Upstart is actually the slowest grower among the batch, growing at around 11%, while the other three companies are currently growing above 30% year over year, with Affirm being the fastest grower at 46%. However, when it comes to profitability, Robinhood is the most profitable, and SOFI comes in a pretty close second. Now, with Affirm and Upstart not being profitable at the moment, that is actually what caused me to be a little bit confused with how the market is actually valuing SOFI and its other competitors, because it really doesn't make sense. Now, when I look at the valuation, currently, I can actually understand how Robinhood is trading at a 15 times price to sales. Now, although I do think that valuation is rich, but with the market that we are in, I can understand why it is trading at that level. What I don't understand is how SOFI is actually trading at half the price of what Robinhood is doing. And I think, if you take a look at Upstart growing their revenue at only 10%, and they're not even net income positive, and yet they can command a 9 times price to sales, I don't understand why is SOFI only trading at a 6 times price to sales. And if you look at it from another perspective, Upstart's entire business only makes up one component of SOFI's business, and Upstart doesn't even do it as well as SOFI because they have loss sharing agreements baked into some of these contracts where SOFI doesn't. And so because of that, I don't think it's unfair to say that SOFI should easily be trading at 10 to 12 times price to sales. Not that I'm saying, 10 to 12 times price to sales is fair value, but in the market that we're in, relatively speaking, I think where valuations are high, SOFI can be trading at least 50% higher from where it finds itself today. Now, and because of that, I really do think the suggestion that, SOFI should be trading at a 10 times price to earnings multiple is really, really ridiculous. And this is not a valuation video, right? So I'm not going to be trying to apply some multiples to their earnings. This is a prediction video, and so I'm treating it like the price is right. And if you ask me, I think SOFI breaks all-time highs sometime in 2025, but I think they will level out at close to $30. And so if I were to call it over-under at 30, I will take the under and call it, $29.90 by the 31st of December 2025. Because I do believe that going forward in 2025, SOFI will surprise many of these analysts with new revenue streams and with better than expected profitability. And so all of these analysts will be forced to re-rate and re-evaluate the company, causing the price to go even higher. But like I said, this is a prediction video, not a valuation video, and definitely not financial advice. And I'll see you in the next one.